you're going to see a lot of people calling for accumulation schematics, distribution schematics. The reality is that you have to be applying volume to those pieces of paper. Otherwise, they are just simply arbitrary pieces of paper. It's just a schematic. You're essentially applying a fractal at that point. Instead, what I'm going to tell you is the same thing that I've already been telling you since June 28th, which is we're just ranging. We're probably just going to continue going sideways until we stop going sideways. It's not a complex analysis, but it's not a complex analysis for a reason. The reality is that we can only either go up or go down from here. So if you're caught off guard by either of those two outcomes, it's really your fault. Essentially, the point that I want to get across really is the way that you're trading this range now should be dictated by how you approached the price action that led up into this range in the first place. The way that I'm approaching the range is simply I have spot exposure from 26.3K, somewhere around that region. So it is pretty easy for me to just continue allowing the same mindset that has rewarded me thus far to just potentially continue rewarding me and continue breaking out above the range. This would be comparative to the range back here, where yes, our local bias does get shifted into that of consolidation. We do start to attribute some sort of neutral bias to that time frame specifically, but we don't lose the higher time frame context in the sense that we understand on all higher time frames we are still uptrending. So while the range does imply neutrality, I'm giving it a slight edge to break out towards the upside, and I've put myself in a position because I have that luxury of having spot exposure from much lower. I've put myself in that position where in the event the range breaks down, because again, it is essentially 50-50, I'm not giving back too much to the market, but at the same time, if the uptrend that has rewarded me thus far continues uptrending, I am still satisfied, even if I'm unable to gather more long exposure prior to the next rally occurring. So if we pull back into those 4-hour 200 moving averages, that would be my do or die kind of region where either we maintain the higher time frame bullish arguments or it's very likely that we don't at all. And then at that point, the only bullish argument relevant to me would be the 200 daily moving averages, which have consistently provided macro bottoms for the entirety of this rallies since the start of the year. So that's just it. If you've been keeping up with me, it would be the same argument that we were making at the lows, which is you either hold this region or the chart is now headed to the bottom right corner amongst all time frames at that point. So that's kind of the order of importance of how I'm breaking down price action. I like to segregate those time frames and make sense of them individually. So that way, when I piece it all together, I have a very clear understanding of what to expect next. So moving forward, we'll go to the ETH USD chart. Same kind of gist here. Very high time frame trend, 200 daily moving averages. But of course, prior to testing them, we do have to start to show weakness on lower time frames first. So that would be the line in the sand argument on all time frames for me for Ethereum, the 200 daily moving averages, along with that demand zone that I have drawn on the chart. When we zoom in, all I'm going to do is apply the same kind of way of thinking that I just did for BTC, but I'm going to apply it for ETH as well, which is if we lose these 4-hour 200 moving averages in this daily demand zone, at that point, I'm allowed to anticipate a much deeper pullback into that next level, which would also be confluent with the 200 daily moving averages idea. So from there, either again, similar to how we did back here, we would show strength and start flipping those levels all over again and hopefully go on and create higher highs. Or at that point, the snowball of bearish arguments would have compounded into a bigger snowball and therefore compounded into a much bigger snowman upon losing the 200 daily moving averages as well, at which point I stopped making bullish arguments across the board. The only other thing that I really want to take note of is strong trending altcoins as of the past couple of weeks or so. So this is very general. Don't think that this automatically applies to every altcoin out there, but just to get a gist of what I'm talking about, a lot of altcoins that I've been watching the past couple of weeks or so are now breaking down below high time frame trends. So that means the same mindset that has previously rewarded me towards the upside because I've been trying my best to catch those trends as much as possible. That mindset is no longer being rewarded. Instead, we're losing high time frame trends. So Litecoin is a good example of this. The 2-hour 200 moving averages are the most efficient trend portrayal in my personal opinion, which means I'm no longer buying a dip. I am in fact buying a downtrend if I decide that I want to bid Litecoin. Yes, there's always the argument that this could very well just be a deviation similar to this time around. But the reality is, in order for this to be a deviation, manipulation come tomorrow or next week or the week after that, we would have to reclaim the 2-hour 200 moving averages, and we would have to reclaim lower time frame downtrend portrayals as well, which I'll show you in a second. So really, that's not the mindset that I want to have. I want to assume downtrend and then be pleasantly surprised in the event that it is just a bear trap or market manipulation or a fake out or a fluke or whatever the hell you want to call it. In the event that that happens, I'm allowed to adjust in a very gradual kind of scale. Whereas if it doesn't happen, had I been making those arguments this time around, yes, I would have been the genius who was right at the exact bottom, but each and every other time I would have been very, very wrong, and I would have drawn down my portfolio much more than what the reward was for being right this one time. Tie that in with the fact that the lower time frame argument is much more actionable in the sense that in order for us to show strength, we would have to reclaim something like the 15-minute 200 moving averages, which were the downtrend portrayal that allowed us to compound onto that weakness argument via losing the 2-hour 200s just recent. So essentially, the thesis is if you ever wanted to continue heading to this top right corner, not only would you have to reclaim those 2-hour 200s, but you would also have to reclaim the 15-minute 200s first. So I'm providing myself luxuries in the sense that I'm allowed to assume a specific thing here and now, and either that thing plays out or just a couple percentage points higher than this, I get to adjust the bias and start scaling into a drastically more rewarding way of thinking, which would be trying to swing long high time frame trend support tests into higher highs. So that's about it for my market update. I hope you guys enjoyed this. Much love and take it easy.